All right, all right. We're here today with Mr. Jacob Karmazyn. How you doing, my man?
Good, Colin. Good to see you, man.
Good to see you. I think last time you and I were hanging out, we were doing a radio show together.
Yeah, it was, about a decade ago, probably now.
Yeah, a long
A
time ago.
while ago.
Yeah, it's great to see you, buddy. How you been? How's everything going?
Good. Just busy, busy.
Yeah.
Got a 5-year-old who just started kindergarten and a 2.5-year-old. So
Are you guys
keeping me
having?
long days and nights, but a lot of fun.
Yeah, 2.5 and 5. I mean, last time I saw you, I don't even think you were married. How long you been married now?
Since 20, it was not 2016.
2016. Well,
8 years.
congratulations, buddy. That's awesome. Hey, so Jake, what I'd like to do is I just want to talk a little bit about, your background, where you were born, sports that you played, and then get into how you became or came into the long-term care insurance industry, right? So if you want to talk about that a little bit, that would be awesome.
Yeah, so I grew up in Laguna Niguel. So my father had several sales jobs from security systems, selling draperies. He actually was a trumpet player, played at Juilliard and Hollywood movies. And uh, one bad divorce happened, and then he had me by himself and had to find a way to work. And he fell into New York life when I was about 10 years old or so.
Yeah.
And so he had to concentrate actually in the long-term care field, retiree field, so he could be home at night to take care of me when I was like, 8, 9, 10 years old.
Yeah.
And so he basically had to do the long-term care market to see the people in the daytime. And so he did pretty well with it. He really did long-term care as his bread and butter for the most part for 6, 7, 8 years. And then when I was like 60, we'd have some ping pong battles, and I'd hustle him for some money. And then I needed some more money, and then he actually had me cold calling for him at like 16 years old.
Dude, that's
So,
awesome.
and so he just had like this long list of just a white page list of people like in Corona Del Mar, Newport, and I would goals to call them and try to send them a brochure, and I get paid like $5. And
And this,
a couple of times,
how old when you started making calls?
I was probably like 16 years old.
Dude,
And
that's
I'd lie, I said that I would say send someone a brochure. I really didn't. And so my dad would call them, and there was nothing there, and I got my $5. But I was cold calling at like 16, and then if he booked an appointment, I got like $50. If he sold, I get $100. And I would actually go on the appointments with them way back
wow.
when. And so I've been
So
like I've been like calling in insurance since like my whole life. I'm 40 now, but this is like 16 years old, really.
I mean, this is nuts. You're 40 now? I mean, you were in your
Yeah,
20s last time. I mean, you had that place downtown, right? You were living
yeah.
up in that loft, but where was that kind of downtown
Yeah,
San?
yeah, yeah, yeah. Downtown San Diego. Yeah.
Yeah, in your later 20s. So this makes a lot of sense. I didn't know that. I knew your dad was in the insurance industry, but I didn't know that you started cold calling for him and doing all that stuff at an early age. So it
Yep.
makes a lot of sense, how you climbed to number one over when you were with Genworth Financial. I mean, and to be so young in the business. I mean, even today, you're still
No,
you're
I still
still
feel young in the business, especially in the long-term care field.
you're a young guy. You're still a young guy. You're definitely the best looking guy in the business. I can tell you that. I mean,
Thank you.
um, so cool. So you're making calls now. So you're in high school at this time. Are you playing
Yeah.
sports too? And this is
I played
side
high
job.
school basketball. Um, and I was really skinny. I'm not that big now, but it didn't help out being 5'10", 135 on the basketball court. You get bumped around a little too easy.
Yeah.
So I was a shooter, and other than that, I didn't have much defense or rebound. So, but I didn't. So then I was 18. I joined New York Life, and I went to Saddleback College, a community college.
And that's
And
in Laguna Niguel.
yeah, Saddleback's in like Mission Viejo, Orange County.
Okay.
So I wasn't ready to
Well,
go away at school yet
were you
until
born there
college.
in Laguna Niguel?
I was born in LA, but I've been in Laguna Niguel since I was 6 years
Uh,
old. So I moved there in
We're in Los
1990.
Angeles, St. John's for me, Santa Monica.
I lived in Studio City.
Is that no? But where in Los Angeles were you born? Do you know?
Oh, Tarzana.
Okay. All right. You don't remember. Okay. I just figured we might have been born in the same hospital. That's why I was asking. But
Oh no! And then well, my dad got remarried, and then she wanted to start a life in Orange County, and so then we all moved to Orange County, which is great for me because it was like young area, all young kids, and new community. It was beautiful
oh yeah.
childhood. And so, yes, I did insurance. So 16 and then 18, I started with New York Life just as I was going to college too, and just get some like insurance background training and stuff like that.
Uh huh.
And then I would go on my dad's appointments with him at 19 and 20 while I still lived at home. And then then I transferred to San Diego State. And then as my dad's like, I'm not driving an hour and a half to go on your appointments anymore. Right. I was like, all right, that is over.
Yeah.
So then I joined Genworth because my cousin Corrine was a Genworth agent. And she's
Kareen
a
from the Westlake office.
yeah. She passed away a few years ago.
I know. I heard she passed away.
Yeah.
So
So
wait. So she's your aunt?
yeah.
Dude, I didn't even know that either. I mean, we worked in the same office. I didn't know that you guys were related.
Corrine Berenson?
Yeah.
Yeah.
Yeah. Out of Vita's office, Westlake, right?
Yeah. Yeah,
Yeah.
absolutely.
Yeah.
My
That's
cousin.
where I was. I remember her very well, actually. Yeah.
Yeah.
That's crazy.
So
So New York Life, right? They have their proprietary product. You have to be a New York Life agent to sell that LTC product. And then, so you got your training with New York Life. Did you have any success with New York Life? Not really. I
no,
mean,
no, I just kind of get it just like so I can get on an application with my dad.
yeah.
Right. I didn't do anything myself whatsoever, but just, attended maybe one or two meetings, but it's mainly just to like get contracted, get your license. I didn't do anything with it.
Okay.
Um,
But how old were you when you wrote your first deal? Without dad. Do you remember that? Remember the first deal that
21,
you wrote or what it was?
21. When I was
Wow.
like, when I went to I transferred to San Diego State. And then when I was 21 years old, I was doing the insurance side still, obviously, and then at 21, I was on my own and, super young and I had my book, and you have to go through the wheel of the long-term care sale.
So it was a long-term care was your first sale, actually. It wasn't a life sale then.
Yeah. No, I still like a term insurance too. Like some people in my gym back then that wanted to throw me a bone.
Yeah.
And so I joined Genworth because they actually had like a long-term care sales force,
Yeah.
like a Foot Clan, an army of us. They had training, and so when I talked to Karina at one of our family parties, she says, "Jacob, you're doing long-term care. You got to join Genworth. There's leads and all that other stuff, and it's a free leads. You can sign me up." And so, and Genworth had great training. They had Salesforce. It's like a long-term care industry product company, and just learned through all the top agents what they did, and they had kickoff parties, and there's a family of long-term care folks versus a bunch of independent agents,
Yeah.
who don't really help each other.
Yeah.
And
Yeah.
then,
So
yeah.
what year did you start with Genworth? And then
So it's pretty cool. I
2015 was the year that you climbed to number one, right? Or was it?
yeah, 2014 or 2015,
I-
and then
But
I
when
joined
did you start?
I joined Genworth in 2005, but I really didn't do it full time until I graduated. It was 2008. Like I would sell a couple policies here and there, but I was still in college, so I didn't really start working full time till fall of 2007 after I graduated college. So 2008 would be my first full year.
Yeah.
And then I was like one of the top 15 agents, and they had a trip to Paris, which is really awesome.
Okay.
So I'm like super fresh new, and I just met my wife too back then, and we took her to Paris, and like we were like already spoiled on these incredible insurance company trips at like 24 years old or 25, whatever I was.
I mean, you had to be the youngest guy there by far.
Oh yeah, they thought I was someone's kid. Like, who are you here with? I'm like, I'm here, man. It's all me.
Yeah, right. Yeah, whose son are you? Who brought their kid
That's
on?
a funnier story. So before that, my first like 9 months, they had like the sales contest trip.
Yeah.
It wasn't a producer trip, but like, hey, whoever gets the most abs in 6 months goes to Miami. And then I was like 22, 23, and I just met my wife like a week before the trip was announced. I'm like, I'm not gonna bring her to Miami. So I brought my three buddies, and we're all broke. We're like 22, 23, so we're all like in one room, and there's food for you and a spouse or you and a guest. And I would just bring my friends one by one down, And so we're all like the three of us. You're only supposed to have one person with you on these trips, but I had three buddies, and they all let us just like eat their food and drink, and it was a pretty cool. We were pretty
where this
poor. We
where
were in
was this
Miami,
trip
but it was
now?
pretty cool.
The Miami trip.
Pardon?
This was Miami.
This
You
is
said.
yeah. Genworth had like a sales contest trip for like 3 or 4 months,
Okay.
and you get to go to Miami. And so I call that was like maybe my first one, which is funny because I brought my three buddies, and we didn't go to any meetings or anything. We were pretty much out the night before,
Yeah.
as
Yeah.
as we should be at that
Yeah,
age.
sure. Having fun, man. That's what you're supposed to be doing. So you and your wife, you guys dated for a long time then before you got married, right?
Yeah,
Quite
six
a long
years. We
time.
met her in 2010, and we got married in 2016.
Oh, good for you. That's a great story. So you guys met in college, you married your college
Yeah.
sweetheart. That's awesome. So,
Hmm.
okay. So let's talk about this a little bit because you were, you know, working with Genworth, I would say in Genworth's heyday, right?
Yeah.
When all the heavy hitters were there. I mean, the Jeff Adlers, the Shad McFadden's, the list goes on and on and on. So tell me a little bit about that. And wait, just a spoiler, right? Saying, since the late great Shad McFadden is no longer with us, he had the best looking agent award, but since he's no
Yeah.
longer with us, it's you, buddy. You got it for
That
sure.
was,
Oh,
my friends called him Jake 2.0.
yeah, nice. So yeah, so
So
tell me a little bit about that journey, and how you went from full time to climbing that ladder and then hitting that number one spot.
um,
Maybe talk a little
I'm like
bit.
a naturally very competitive person. In anything I do, board games, I don't care what it is, I'm just a competitive. And those rankings really meant something to me, seeing your name at the top and wanting to stay at the top. And that really kind of fueled me. Um, and then Shad was just the top agent, and he took me really under his wing, which is really nice. He was um, a little bit older than me, but like younger than me. He was, and he missed them very dearly right now. But he was great at mentoring me as a younger agent because all the other agents were like a solid 20 years on me.
Yeah,
So I didn't really relate to them as much as I did with Shad. And he brought me under his wing and just, basically buy leads, believe in yourself, and a big instrumental part of my life then. And just seeing those names at the top and keep working at it and, wanting to set your goals to be the top agent or whatnot. Going on those trips were awesome.
yeah.
A lot of
So
camaraderie.
I mean, when you were developing right along this journey, I mean, how long? I say it's a practice. We're constantly learning how to become better sales guys. But when did you feel real confident in your sales ability, right? I mean, did you keep track of the number of appointments you were running? And this is back in the old days when you were actually sitting down face to face versus
Yeah.
sitting on the computer. I
Um,
mean, where
I
where
would say
where,
probably
where
I would say probably 3 years into it. They say it's like 10,000 hours to be an expert at something. Well, I mean, my 10,000 hours were a lot faster than
Mhm,
most folks. I've been around it for so long. I think as soon as I got comfortable that like my age wasn't a factor. I was
correct.
always comfortable in what I was talking about and selling, but as soon as I got comfortable with myself that you know my age going into these homes, was a little bit thing that I was not comfortable with in the beginning, but eventually got over that.
Yeah,
And but I would say probably 3 years into it.
3 years. Okay. So
Yeah.
and then out of all the appointments you ran, let's say you ran five in a day or whatever. Did you close all of them? I mean, did you keep track of your closing?
No, I mean I would probably like 60% of them. I mean back then, when you drove to someone's house for an hour, you really want to take that application.
Oh yeah,
Hey, you can change your mind tomorrow, and then you realize that doesn't really help anybody, right? And so, but I would say like 60%, 3 out of 5. Definitely not 9 out of 10 or 8 out of 10,
yeah.
but 3 out of 5, I would probably end up selling, and whoever kept them or got approved from it.
Yeah, and then nowadays, I mean, has the business gotten quite a bit easier now that you got a little bit, maybe a couple gray hairs in your
Um,
whatever?
it's challenging and easier in different ways. I mean, it's easier. They don't have to drive to someone's home.
Yeah,
If you know the appointment isn't going to go somewhere, like they tell you, oh, I forgot to tell you, I have this health condition, and I'd have to drive an hour later for them to disclose this to me, right? But I think this closing is a lot percentage wise is down because people are shopping naturally, right? You're not really shopping 10, 15 years ago. There's not really like virtual, searching for long term care insurance online and someone's going to call you from another state 15 years ago. It was like a little bit before that time.
Mm-hmm.
So the closing ratio is probably down because there's just more options. They're talking to more people.
Yeah.
But I can get in front of way more people because it's a virtual meeting.
Sure.
So there's pros and cons with them, and because it's easier to book a virtual meeting, you don't have to pre-qualify them as much as if you were driving to someone's home for sitting in traffic for an hour.
Well, I feel, at least with me in my practice, sit kneecap to kneecap, my closing ratio was always really high. And then, running the Zoom type meetings nowadays, it's not nearly as high as it was. And I'm not quite sure, you can pre-qualify somebody, health wise, financially, over the phone. But, when you pull into somebody's driveway and you get the ability to, see the neighborhood that they're living in, right? How nice is the house? I think it just gives you a little bit, you have a better understanding of the client, versus just sitting here on the screen back. And I think it's easier for people to say no when they're looking at you, via the computer versus you sitting with them kneecap to kneecap. I mean, do you feel that as well? Or?
Yeah, absolutely.
Yeah.
Definitely. My closing ratio was a lot higher when I could see them face to face and trusted them. My long-term care sales are like all over the country now, right? So I do like several states. I don't get anybody in San Diego ever. I basically get all my leads from like Google search. And so whoever searches long-term care insurance, I do like 10 states or so. I just basically kind of purchased a lead more or less.
Mm-hmm.
And so, but I like the virtual sales way more. I would never go back to kneecap to kneecap. I swear to you, if I had a neighbor that filled out a lead, I wouldn't want to go to their house. I would want to still stay here.
Really? So that was my next question. I was going to ask if, any of your really big clients that maybe, in a certain vicinity, would you actually go see? But no, now you just see them this way.
I don't know. I haven't had one. I had to go face to face in like several years.
Yeah.
Of course I could,
Yeah.
but I haven't found the reason to do that.
Yeah.
I haven't found the reason to do that yet.
Well, so for example, if it's a bigger case, like you're writing a $1 million annuity.
Yeah, I'd rather go see them. For
Yeah,
sure.
in that scenario.
I'd rather go see them.
Yeah, I get it. Okay, so I mean, it's not off the table. It's just potentially how large is that client, and then a lot of times too, like I know we'll talk more about how you've expanded into retirement planning here in a little bit, but I think that type of sale, a lot of people kind of want to get to know you. When you get into that type of product, but let's not go there yet. Let's stick with the long-term care thing.
Yeah, I would say that's same. So the long-term care is really just kind of options and costs versus like that retirement planning, income planning. That's kind of more of a face-to-face sale and trust and getting to know them and their goals and concerns. But the long-term care is kind of more of a transactional sale for the most part.
Yeah.
So
it's not nearly as transactional as like a term sale or something like that, right?
No.
There's a little bit more to it. And then, realistically, when you're talking to people, and they're shopping you for long-term care, do you share with them your background a little bit? Because I couldn't think of a better person to purchase a long-term care policy from. You know exactly what's going on. You know all the stats. You know all the products. You've been doing it. You're a seasoned veteran at this point. I would buy my long-term care insurance policy from you. I know that much for sure.
Thank you.
You don't share that with them.
No, not too much.
Yeah.
I don't like build myself up on appointments so much. I feel like I probably should do that more, but I'm kind of there to like help with it. I don't boost myself up. Like I'm connected with like Dave Ramsey. I do federal retirement leads. I'm a Social Security advisor. I have that stuff in my bio that I send them if they want to read it beforehand. My meetings, I send them a bio about myself.
Yeah.
But I don't like talk about myself too much in meetings. I probably should, but it's just something
if you could
do it actually.
Slip it in there, yeah, and talk about hey, climbing to that number one spot, at the largest long-term care insurance provider in the country. It's something to be proud of. But
yeah.
So so realistically, so you come in, you're working the Genworth Lead program. Now you've connected with Shad McFadden. He's brought you under his wing. Shad kind of teaches you, hey man, you got to really spend some money on marketing. You got to go out, buy more leads, do more marketing, face to face, whatever that type of thing was, right? So so there was a transition there when you started really investing in yourself and above and beyond, right? And that's what climbed you to that number one spot. I mean, how long were you marketing outside of Genworth, developing your own marketing, purchasing leads, dinners, whatever, all the other things you were doing? How long, did that take you to go from, top 15 to number one?
It happened pretty fast. I would say within a 1 or 2 years, so not very long.
Yeah,
Um, and
that's
then also
awesome.
like having the confidence of doing like those, which are getting very popular, the asset-based long-term care products, the single pay premium. So back then, a lot of agents were like, "Hey, no one's going to give me fund $100,000 policy or $200,000 policy." We were just meeting them, and I wasn't afraid to, if I felt that was a better plan for them, to bring it up and position it.
Yeah,
So I was like the by far the top agent selling those asset-based products.
yeah.
So like they're like
And nowadays, is that the
in
bulk of?
production credit, it's like 3 to 1, right? Like selling one of those asset based is like a 3 to 1 ratio to a long term care policy.
Mhm.
So just having the confidence saying that just because I think it's a lot of money, which it is, doesn't mean that they feel like it's too much money for me to bring up. So doing
Right.
that, the asset based long term care really um, made those numbers go up and things like that.
So I interviewed Steve Wilson, a few weeks back, and we touched briefly on the evolution of the long term care space. Can you talk a little bit about that too? Kind of the older type policies and how they've moved into the asset based type of product, and then share with the viewers, what products, what are some of the. You don't have to disclose the carrier, obviously, we don't do anything like that, but the products that you really like using this day and age.
So long-term care industry has really, really changed. I mean, I think there's to be hundreds of companies, and there's maybe a dozen carriers, and of the dozen, there's a half a dozen that actually write business. A lot of them are so expensive they kind of just discontinued sales because they made it so high. So there's only really about a half a dozen carriers. Um, it used to be the days where you could like buy a full insurance policy, like you almost cover 100% of the cost. Now it's really as a supplement plan. You have to go into that mindset and the client mindset that hey, you're not going to be able to purchase 10,000 or 12,000 a month of coverage for 10 years of care with 5% inflation. It's really here to supplement the cost of care with your, social security and IRAs and things of that nature. So it's just kind of like having to feel better of a co-insurance as a supplement plan.
Correct. And then also too, I mean, if you're helping them out with their retirement income, right? And between the supplemental plan and their retirement income, you've got these, guaranteed income streams that you've done for clients. I mean, now it's not a supplemental. I mean, now you've basically set up a full service scenario.
Yeah, and I told them like, long-term care is obviously a way to give you money when you're sick, right? And a lot of time, well, no surprise, a lot of clients cannot buy long-term care insurance, like because of their health, they just get declined,
Yeah.
or they feel it's not right for them.
So let's elaborate on that a little bit, Jake. So talk about like when is the best age to take out a long-term care policy? Because I know Ramsey likes to say 65. My personal experience is at that age, you've got too many health issues. It's not really the best way to
And
go.
it's also too expensive too.
Exactly. So it's like what,
I
50?
would say like 50 to 55.
Correct.
I'm not a
That's
big
your target.
proponent of,
Yeah.
yeah, I'm not a big, I had a lead yesterday. She was 40 and her husband's 30. And like I'm like, why are you looking at it right now?
Yeah. Yeah.
I said you should do like an index UL. You should do a hybrid product. You really want a regular long-term care. I just said you're really young for that product to pay it for 50 years or something of that nature.
Yeah, but I mean, what if they're doing a fully paid up product? I mean, would that be something that
They
might?
didn't have this person had the finances to do that. I was just shying them, but I would say like 50 to 55. I feel is the sweet spot
Yeah.
for long-term care insurance.
And so, what would you say? Let's just off the top of your head. I realize these aren't going to be exact numbers, but what would you say the approval ratio is, say, from 50 to 55 versus 65 to 70? So
I mean, assuming
you got 10 people that are in their early 50s or below 55, they apply. How many do you think get approved versus you have 10 people 65
so
to 70?
if they all apply, so if I had 10 leads of people 50 to 55,
Correct.
and they all were interested and wanted to apply for coverage, I would say 80 or 90%, 80% of them would probably be insurable 50 to 55 ish.
Okay. So you're saying 8 out of 10 between 50 to 50. Now let's take that same thing and go 65 to 70. Now you've got 10 people that apply.
Oh, I would say 50% at
So it
best.
drops off dramatically.
Yeah,
And
dramatically.
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 And it doesn't, so it really doesn't pay to wait. I mean, the
No.
longer you wait, yeah, I used to tell people
So I have this good analogy I tell people the longer you wait. So just because the longer you wait doesn't mean you're going to be able to afford more money, right? What people usually pay for long-term care insurance is like 300 to 600 a month. Right? You're not going to buy a policy for $100 a month. And people generally, the masses, don't spend 800, 900, 1,000 a month for a policy. I wish they did, but they just usually don't do that. If they do, they'll usually do asset based. So
yeah.
it doesn't matter how long you wait to buy long-term care. Your affordability is going to be your affordability in retirement. So the longer you put it off, the less coverage you'll be able to purchase. Just because you
But
wait 5 years doesn't mean you're going to be able to afford 300. I can afford 600. So
Okay.
your purchasing power just gets to be less and less and less, where it just almost doesn't make sense anymore.
And so let's just say the person in their early 50s buys a policy, right? Versus the 65-year-old and they purchase a policy. And let's say they both go on claim at 82, right? Is the younger person, their total premium is going to be less than this person over here? That's the
Yeah, they'll pay less they'll pay less for more.
They'll pay less for more. So I mean, think about that. I mean, that's an amazing thing, right? So it's like you're not saving any money, number one, because you waited. You're actually paying more money because you waited, right?
Yep.
So you go on claim at 82. This person that took it out at 50 has paid less, and then they got an additional 15 years worth of protection, and it didn't break the bank. And not to mention that their approval rating goes way up, where a lot of people, all of a sudden they like my stepfather who passed away. I mean, everyone feels great until one day they wake up and their arm's shaking, and they're like, why is my arm shaking? And they go and they find out they have Parkinson's. Well, too bad, so sad, buddy. You should have taken that policy out ahead of time. I mean, he was in the industry, so he already had, good
I
coverage.
mean, I say it all the time where I'll get a lead and they say, call me in 6 months or call me a year. And you do, and they get diagnosed with cancer, or they get, they broke their back, or they have pain now, or just all the stuff you see all the time. And I just wasn't able to help them when they wanted it.
Yeah.
All the time.
Yeah. Yeah. And did you ever share that with people? I mean,
Yeah.
I don't a lot of the times, but a lot of times I almost think it's like, listen, you kind of got to share that with them for that example that you just mentioned, right? I mean, hey, you're healthy now, the chance, who knows, 6 months from now, you may develop a health condition or not, right? And the next thing you know, bam, they've got cancer. I mean, you don't want to say, I told you so, but
Yeah.
I mean, how much better would that client have felt, the client that got, cancer, if they would have insured with you the 6 months earlier,
I mean, of course, you'll have a plan, and we'll see somebody goes on claim within 2 or 3 years of buying a policy.
Yeah.
It's
So,
like,
hey, sorry to interrupt there, but I wanted to, when we did the radio show together, right? And I remember, and I listened to it not too long ago, and this was a long time ago. I mean, this was probably like 13 or 14 or something like that. So it's been a while. But you had all the stats. It really impressed me, like with, the claims, how long the claims are, how many people are going to need long-term care insurance, females versus males. Can you share that? What's going on in the industry, and what are those figures nowadays? I would like to know.
I don't know. That's when I really knew my stuff. I'll refer them to a website.
Yeah. Well, I mean, back then though, it was like.
But I mean, they say 70% of long-term care claims are to women, right? They make up the vast, vast, vast majority of women. So women are the ones that need care, and they're usually also the caretakers, right? The caregivers. So because that premiums are significantly higher for women, I generally tell folks that I think you need it or you're not, meaning that like if you're going to buy 2 years of care, you should purchase 3 or 4 years of care.
Hmm.
Because if you need 2 years, it's probably going to go into the third or the fourth year of care.
So how long is the average claim nowadays, Jake? Let's say claim not related to cognitive impairment. I mean, what?
They say women is 4 years and men is like 2.5 years.
Okay, and that's just
Um,
the average, right?
yeah, that's just the average, and average is good for insurance companies. It's not good for an individual. Chance
Yeah.
of your home burning down is not that likely, but until your home burns down. Um,
And then what are some of the longest claims that you've seen throughout your career?
10 plus years.
10 plus years, yeah.
Yeah, I
Now,
mean,
are
yeah,
are those cognitive claims or no? That's just any type of.
yeah, mainly cognitive claims.
Man, that's a tough thing, isn't it? Just going through that, and then nowadays with the
Hmm.
and everything else. Um, so 70% of females. What's the percentage of men that are going to need care? Just
I think the American Association says for about 40%, 40 to 50% of men.
so basically, typically what happens is, right, generally the wife will outlive the husband. And let's just say, the husband requires care and they decide to self-insure, right? He's blown through, they've blown through a bunch of their retirement money taking care of him, having caregivers come in. And then it's like the wife is left high and dry if something happens to her.
Yeah.
So, it's pretty important to have that coverage in place. I always, one of the things I used to say, and I still use it, it's like if you choose to self-insure, the first one to the money wins, right? I mean,
That's good.
yeah, it's a sort of a tough deal for that remaining spouse, and like you mentioned, they're really the big caregivers. Um, so, talk a little bit about some of your success stories. Maybe some declines you've got overturned, or clients that you were able to help that were working with other agents, and other agents weren't able to get the deals done. I mean, dude, you're incredible at getting deals done. So, why don't you brag a little bit about that?
So I had 2 wins the last 3 months, 2 big wins. So when someone gets declined for a cognitive interview, there's usually never, ever, ever a second chance, ever.
And I hear
Like
a lot of people flood these things that are, they're like a professor and they're a decent.
they can, and you, it's almost impossible to get them to do a second interview.
Okay.
It's almost they insurance carrier got their out, and they don't really, because there's such few carriers, they don't need they don't get benefit of the doubts
Yeah.
because there's no one else to sell for. So everyone's just flooding to 2 or 3 carriers, and they really don't want as much business as they're probably getting. So this guy got declined, and I said, "Hey, John, bad news. You were declined for your interview." He says, "Well, I had a really hard time understanding her." He says she had this really thick Jamaican accent, and
I've heard these. I've heard these horror stories. Yeah.
and I just couldn't understand her that well. I said, "Okay, well, I'll see if they'll allow a second one." I've never, and so I talked to the underwriter. I said, "Hey, this guy's, I think he's pretty healthy," and he just said he had a really difficult time understanding the nurse, and she even kind of mentioned it to the client. I said, "Can you listen to the phone call?" And so they listened to the phone call, and they can kind of hear him having a difficulty understanding the nurse.
So you had the underwriter listen to the phone call, right?
No,
Because
no, I'm
normally,
sorry. No, it wasn't a phone call. It was in person, but they interviewed the nurse.
oh, they
I'm
interviewed
sorry.
the nurse. Okay.
They interviewed the nurse, and she agreed that, yeah, he did have a little bit of a difficult time understanding me. I kind of said, if you need you need some help. And so, benefit of the doubt, I'll give you another. They allowed him to redo it with a different interviewer, and he passed it and got
So,
approved for the policy.
I mean, this is a huge win, right? I mean,
That was a
how
huge
many
win.
how many agents, right, are going to put in that work and make that deal happen? I mean, that's just awesome. And I want to touch on something else real quick before you talk about your other success story that you had. When people are shopping around, right? And let's say you mentioned there's 6 carriers mainly that you're playing with, right? If they're buying the product here, from agent A versus agent B, right? And it's coming from the insurance company, the price is the same regardless.
Yeah.
I mean, it's not like shopping for a mortgage where you can go
Yeah.
shop interest rates and get a lower rate over here. I mean, for example, if you write a policy on yourself, okay, it's going to be the same cost as if you sold it to somebody your age and everything else. Is that right?
Yeah, yes, correct.
Correct. So, I mean, realistically, it's like, well, what do you need to shop around for? I mean, here are the carriers. Here's the right thing. Away we go. I mean, do you educate clients on that, or?
Yeah, I tell them the premiums are state regulated, so no matter who you buy the insurance carrier from, it's the same price for you no matter what. All an agent can do is show you something more or less expensive, but if you match up everything side by side and
Uh-huh.
you want carrier A or carrier B, that's going to be the same policy for you.
Okay.
So definitely, and I think they understand that too.
And does that help overcome the objection of, hey, I want to shop around for price stuff? Do you feel like?
Yeah, it does. Yeah, it definitely does.
Okay, good, good. That's awesome. Well, hey, let's talk about your other success story. You said you had two in the last 3 months. That's a great success story.
Oh,
Well,
this one's good. So same line. So this woman, she's like 65. She had three parents die within 6 months, like her mom, her dad, and her like stepdad,
yeah.
due to long, and she had to take care of them. And so she tells her doctor, I just feel like I'm losing it. I'm caregiving and this and that. I just feel like I'm forgetting things.
Mm-hmm.
So doctor writes, oh, patient complains of memory or forgetfulness. Well, that is like your big, big, big red flag of all time, right?
Mm-hmm.
Self disclosed like memory issues. So of course they declined her, and I understood the lady, and she told me the story beforehand. I said, "Darn it, this is out of context." So I spoke with like the chief underwriter of the carrier. I said, "Hey, this woman is taking care of her parents for 6 months. They all died." And she's just telling her doctor, I just feel like I'm losing it. Like just talking, I feel like I'm forgetting things. Like just having a conversation. Like
Oh,
she does not have memory issues. She does not
all the
have any.
stuff she's going through, all the finances, the
Yeah.
rules, to this, to that,
And
to so on and so forth.
so
Of
she
course.
like spoke. These notes were in July of 2023, and she got declined in February of this year. And the chief underwriter, I wrote a letter with the doctor, all this stuff, the debtor log, and they said, okay, have her reapply at the 1 year mark from her self, not diagnosis, but self, proclaim whatever. And so we reapplied in July a few months ago, and they approved her.
Oh, great. Yeah.
Yeah, so two like memory. So basically, if there's any other agents listening to this thing, like don't give up on a memory denial. Like go to bat, and so those are huge. The clients were so happy that they got approved. So those are huge wins.
I mean, and doctors are so sloppy about what they put in the medical files. I mean, and then like I've had deals where they have stage 4 kidney failure and this and that, so on and so forth, and it's like, oh, they jotted something down in the notes wrong, and client goes from decline to preferred best scenario. I mean,
Yeah.
I,
Or if I go to the doctor, I'm like, what do you? I'm just talking to you right now. All right.
yeah. Well, I mean, you
I
got to
got
stay
it.
on top of that stuff. Nobody does, and no one thinks
Yeah,
of anything
absolutely.
like
So
that.
yeah, so those are like two really those are two really nice wins that I was happy for the going to bat, and most agents would probably just give up on memory denials. So those are two this year. So that was really great.
Well, and I will say this: when I was wholesaling for you, for a period of time there. I mean, you just went to bat for your clients on every deal. I mean, I can just remember you're this.
Oh
Hey man,
yeah,
we
yeah,
got
yeah. I remember this.
we got to get this thing bumped. We got to get this one moved. I'm like,
Yeah,
I'm like every deal that Jake submits, if it doesn't come back top tier, trust me, he's gonna be grinding.
yeah, 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 yeah.
But look, I mean, that's awesome, dude. It says a lot about your character, right? Because you're really going to battle for your clients, and
Yeah.
and with all your experience doing this ever since you were 16 years old, tell me a little bit about what you've learned as far as working with underwriters, right? And how do you have successes, dealing with underwriters? There's this. Well, hopefully none of my underwriters are listening to this, but there's this. Scenario that we're really all on the same team, right? And they kind of, they like to have this facade, maybe, if you will. In reality, right, we're field underwriters. We submit a deal, and they try to figure out a way to not make that deal happen,
Oh
right?
yeah.
But they'll tell you they're trying to find a way to make that deal happen. I mean, what,
Well,
tell me.
there's some underwriters that'll work with you, and some are just, there's ones that if they're my underwriter, I'm like, oh no, right, and not going to have much of a benefit of the doubt. Sadly, that is sometimes the case, right? Where other ones, they'll really work with you on a denial. Hey, this is what we need you to do. This will make us feel comfortable. So I think like just building a little bit of a relationship, a rapport with the underwriters goes a very long way.
Yeah. Right.
Because
Treat them well, schmooze them, all that kind of stuff.
yeah, it's better to also come in from where they're coming from. Hey, I don't want to put you in a bad situation and have you feel like some things are just out of context and like and so some of them will work with you more than others. Um,
I used to operate like with the iron stick, right?
yeah, I
When I
used
was
to.
younger, I used to be that way, and then all of a sudden one day it just comes to me, and that old saying, you get more bees with honey or whatever it was. So
Yeah, I used to be the same way. I used to like not lash out, but I'm never going to give you another piece of business, or
oh yeah, right,
rely more. I'm the top agent, or
yeah.
what do it doesn't work that way. It
Well,
doesn't work that
it doesn't work that way. And then I developed some really good relationships, right, with a couple of underwriters that I'd worked with for a long, long time, and I'm not going to disclose the gentleman's name, but I worked with one underwriter for 10 plus years. And he knew me when I was the iron fist guy, right? And I was just constantly just hammering on him, hammering on him. And I mean, I'm telling you, where there was like blow up calls with the chief underwriter, right? And everyone else, and me just in this, you know, underwriter
way.
going back and forth the blows. And I can remember being on a call one day, and then uh, the chief underwriter and then the head of the independent department's like, "Hey, we don't care what you guys do, but you two guys are going to work this thing out. And you're going to work
Yeah.
this thing out, right?" So it's like, we're going to the ring. So we had to sit here and, they're like, whatever you do, you guys are going to have to figure out how you guys are going to work together successfully. So
Yeah.
I had to drop the hatchet, if you will, and just say, all right, okay, what do we need to do here in this scenario? And then I went 180 degrees the opposite way because I felt bad. I felt bad because I,
Yeah.
heated. And then I would start making calls on Friday just to be like, hey, just wanted to give you a call, see how your week went, how you doing, I hope you had a great weekend, and just build some rapport. And I mean,
Yeah.
after I made that shift, I mean, placement rate went way up.
Yeah.
They are
It
willing to
definitely.
work. They want to work with people that are kind and treat them right. If you treat them
Yeah.
horribly, they're just like, yeah, whatever. I don't want to work with you.
Yeah. Absolutely.
Yeah. So sorry to go off on that rant, but so the point I'm trying to make with you have quite a few good relationships, right? So somebody that comes to you that is health compromised, I mean, the fact that they're working with you and you have these great relationships, is it fair to say that you're able to get deals done, that the average guy can't because of
Yeah, I would say yeah. I would have a better chance. I feel like if there's a decline, because I know the declines. I kind of know what needs to be appealed, what the doctors need to write, how to also talk with the underwriter. So I feel like if there's a borderline, I put my chances with, compared to most with getting something approved or better turnout.
And so after you kind of get an idea as to what's going on with the medical records, when you say getting the doctors to write letters, you're sending your clients back, right? To say, hey, let's get some clarification on this. You need
Yeah.
your doctor to write this letter, right? Explaining the details of this or correcting this scenario. So that's something that you do with your clients as well, which
Yes.
makes a huge difference.
I kind of paraphrase it. Hey, we need something a lot right along the lines of this,
Mhm.
and I'll paraphrase it and say, hey, see if the doctor can. This is what we need. If the
Yeah,
doctor's willing and able, this will help us out.
yeah. I mean, it's important that you do that. I mean, this is what a good agent is supposed to do. I had a recent case. I'll just share one quick one with you. And not that it's your interview here, but that an agent had a younger client, and she did like an extreme fast. It was like a 3 day long fast, and went and got blood work, right? And the blood work was off. Now we're talking. This is somebody that's in like their early 30s, and comes back table 4, and he places the case. This agent places a case at table 4. And so anyway, she was referred to me, and we redid everything and put her back through underwriting. I explained the scenario, and she comes back preferred best. But I mean, I
Oh
just
wow.
like I was so taken back. I'm like, what kind of agent would
Yeah.
place this case with a female who's on no medication, no health issues, knowing what transpired, right? This is the example of what I call a bad agent. Somebody that just, hey, I run you through, I don't want to put in the extra work. I don't want you to have to go redo labs, and they're just slamming them through. I mean, that's not something that would ever happen, working with somebody like
Yep.
yourself. I mean, you get that corrected instantaneously. Um, so, uh, how do you stay motivated and passionate about the business now that you've been in it? I mean, you've been in this business a long time now. I mean,
Yeah. Um, well, family definitely, having goals for yourself is huge.
yeah,
Um, having children, my family, my wife, kids, keeps me to the task,
yes,
bar none. I enjoy working. I have a lot of buddies that just play golf all the time, and I can take off easily and just not book appointments and go play golf on a Thursday and a Friday. But I enjoy working. I enjoy the grind of it, the making the money, providing a better life for my family.
yeah.
Um, I enjoy it, really do.
You're just a workhorse. Yeah, you've been doing
Yeah,
every.
I enjoy helping people. I enjoy the meeting. I don't enjoy making the calls and the prospecting, and that's not enjoyable. But I enjoy the meetings and helping people, and help. I still enjoy it.
So let's talk about now how your practice has evolved. From just long-term care. Now you moved into retirement planning. I think
Yeah.
a lot of times that's a good natural transition for somebody that's been in the business a long time, a seasoned agent like yourself. So let's talk about that now. And I mean, in addition to long-term care, everything else that you're providing for your clients. I think this will be
I think you just kind of just want to challenge yourself with new, you know, challenge yourself with new knowledge. Be a be more of an expert at different parts of retirement. And so I've enjoyed learning it and implementing it, and I know my clients have benefited from it from a lot.
hmm
Uh,
So, and then how long have you been doing the full retirement planning component?
I would say like 2 to 3 years.
Okay.
Once COVID happened and all these homes started skyrocketing and becoming so expensive, I said, "Oh my God, I gotta figure something else out other than just selling long-term care, which is a good living." But living in Southern, San Diego, home
Sure.
prices, life is just ridiculously expensive. I said I have to start, providing other benefits to my clients that also benefit me as well. So about 3 years ago, once COVID and everything started skyrocketing, I said I gotta build my practice a little bit more, and it's been more enjoyable. Sometimes it's more enjoyable to talk about like the retirement strategies than just getting sick and needing long-term care. You
Yeah,
know,
it's a different
I mean,
conversation.
there's both. Like it just they go hand in hand, but creating an overall plan for them and how they can maybe fund long-term care without long-term care insurance with annuities or fixed income products. I've enjoyed it, and I know I provide a lot of help for my clients that they really appreciative of
So
it.
you're doing some quite a few things with annuities, guaranteed lifetime income. Uh,
Yeah, I sell them as like a way to fund long-term care. Like, oh, it's two different. I mean, I sell it in a way that a lot of people don't get approved for long-term care insurance, plain and simple, or they don't want it. And I said, well, hey, if you're going to self-insure yourself, annuities are great ways of doing it because they'll never run out of money,
yeah.
right? And some of them will double for long-term care. So if you get sick or you're impaired, it'll double your payout. So if I said like, if you had a bucket of money of 200,000 and 200,000 here, and you're going to get sick, well, you want to use your annuity because they'll never run out of money, right? So even if the account value goes to zero, the income goes on forever and for your spouse. Versus if you self-insure your own 200,000, once it's gone, it's gone.
I,
So
these products are incredible nowadays. I mean, the
yeah, so I mean, some of them say, "I'm glad I was turned down,"
yeah.
because I said, "Why didn't you show me this earlier?" I said, "Well, I inquired for long-term care insurance. I'm not just gonna show you a different investment product or insurance product that you feel like, why is he not selling me long-term care?" So there's a fine line of when you can present it. I think when there's like really good when there's shoppers,
Mhm.
obviously.
Yeah.
So a lot of times clients are happy they get not happy. They're not bummed out that they were declined because they actually preferred this other
Product
product
that you
for their
moved them.
situation.
Correct. Yeah, and I think that's incredible too. And then the fact that you're able to set up, basically a pension, right, for your clients. I mean, so that
Yeah.
all these 401ks. I mean, I'm not sure what the percentage is, but let's say half of them, they all fail, right? The old school days of where people went to work, they got a pension, they didn't have to worry about running out of money. I mean, those days are pretty much gone. I mean, there's only a handful of businesses that you can get in nowadays.
Very few have pensions. They don't want the employers don't want the risk of paying it and investing it, and so they
Yeah,
put
so
the risk on the
they
employee.
cut back and created the 401k, right? So
Yeah.
that they don't have to continue to fund those pensions. But what you're able to do is you're able to help clients, right, make their own pension so that they're
Yep.
not going to run out of assets. I mean, that's an incredible thing because, I'm obviously got quite a few years on you, but I mean, I can remember going back into '08 when the market collapsed and everyone that was, retired and if they
Mm.
didn't have a pension strategy in place, I mean, all these people, and they had to figure out a way to get back into the workforce. I mean,
Yeah.
it was a really tough time, and it's when I became a stockbroker, financial planner early on, I remember going through that. So, I mean, I think that the benefit that you're able to provide, to your clients and having that sense of security and then just, taking some of the worry and the headache out of that whole retirement picture is amazing.
Yeah.
Um, so, so typically now, I mean, are you're holistically helping, all of your clients, or are you just doing, certain client specific long-term care? Or you're providing your services across the board. If they want to take advantage of it, great, they can, you know, um,
Um,
share
I,
that.
I send them like emails and like letting know what I do in my practice now. You know, I don't hammer the phones on them and try to get but I keep them in mind. I mean, I put myself out there so they know what I'm providing in case if they're not happy with their experiencing with their other agent or advisor, that I help them with that. Um, but I do it here, mainly for newer clients, when newer relationships, but a little bit of everybody.
That's awesome. So, Jake, this is going to be, popping up. We're just doing all of our social media marketing. If somebody's watching this, what's the best way for a client, a potential client, to reach out to you, get a hold of you? We're gonna
My email would be best
Okay.
at Jacob, Jacob at karmfinancialgroup.com. Karm,
financialgroup.com.
yeah, so
And
Jacob at, yeah, karmfinancialgroup.com.
okay. And then I'm going to put we'll have all your contact information up on here as well so that they'll be able to find you and know how to get in touch.
Awesome.
Dude, it's been great chatting with you, bro. I mean,
That's a lot of fun. I appreciate it. It flew
no,
by.
it's been really cool. And yeah, we have your official award. You will be receiving it, the best looking insurance agent. I mean, you've got the spot, buddy. So I appreciate the time today, man. It's
All
been
right,
good,
brother.
bro. All right, man. Take care of yourself. See ya.
Appreciate it very much. Take care, man.